What's up, guys? It's FFX, aka Finesse FX, Pipsy Hustle, because I hustle for those pips. Anyways, today is Sunday. Um, Due to the fact you guys are engaging very well in my last educational post that I posted yesterday, and you guys seem to really be enjoying it. I want to make another one for you guys. I really want to start engaging more with my followers. Um, there's a lot of bullshit going around on the timeline lately. And if I can help anyone understand price action better, it just, more power to me. It makes me feel good, you know. Um, so the goal of this video is to just help another trader at the end of the day. I'm not here to shit on anybody else, and I know my value. I know what I'm able to bring to the community, and I've been slacking lately, and I want to just give y'all some more education, some more content. So my last video, we focused on consolidation markets, how euro and dollar over the last 18 plus months has been in a tight range on those higher time frames. So you should be focusing on, taking out old highs, old lows, and staying inside of that consolidation, right? This video, I'm gonna dive deeper into the PD Ray matrix again, okay? Um, We're going to be talking about discount and premium, how to identify our dealing range. Once again, like I did in the last video, we're going to do it again in this video. We're going to identify our dealing range. We always want to ask ourselves, where are we at in that dealing range currently? Where should we go next in that dealing range? Okay, so let's just jump right into it because I know you guys don't like these long, drug out, boring videos that get you nowhere. I like to keep my videos exciting. I like to keep you guys engaged with the way I teach. And the only way I can keep you guys listening and focused is by getting straight to the point. So we're going to do that. Here we have the Aussie dollar monthly chart. Let's go ahead and identify our overall dealing range. Okay. So our overall dealing range, obviously, is going to be from the bodies here because we don't want to focus on this giant wick. I'm going to take the swing low of these bodies and drag it up to, you can use the wick on here, or you can use the bodies up here. I'll just use the very high for learning purposes. So here's our dealing range. Where are we at inside of this dealing range, guys? We are at equilibrium, okay? So everything above this level is going to be a premium of this overall dealing range. So we're in a premium. Where should the market seek after it takes out premium liquidity? An opposing PD array on any time frame, the current one, or any time frame lower. So the market should want to look for sell side liquidity when it gets ready, okay? And come down here to anything below 50%, which is a discount. So when you're trading that PD array matrix, you want to identify equilibrium. So everything above it is premium, everything below it is discount. So we're in a premium right now, okay? Let's take this off. Where are the PD arrays? Down here in the discount zone. The first one I see is here. It's going to be this candle's low, this candle's high, and the candle in the middle creates the buy-side imbalance. This candle never opened and closed and come down and filled in this bullish candle. It left it open for a reason. That way it has a reason for the market to come down at a later time and fill in that level. So the algorithm does this on purpose, okay? So we're in a giant premium on the monthly chart. We're sitting on our hands. Price takes out an old high here while we're in a giant premium. Let's say we're doing nothing right now, okay? We're not trying to call the very top, okay? We're not Romeo. We're not every other trader that, oh, we just happened to catch it. How many fucking times did you click the button, the sell button, to catch this sell? Probably a bunch. But anyways, so we're on our hands. We're waiting for something significant enough to tell us that this market wants to seek a discount. So you might have to just wait until, the whole month closes, just like this. As soon as this candle engulfs and closes below the bullish candle after taking out premium buy side liquidity here, this confirms our order block. You guys know I like to take the wick to body, extend it out in time. There's my zone. That should be the sensitive level to keep price lower. We just took out buy side liquidity. Every time you see a high in the market, you always want to look left, because 9 out of 10 times you're going to see a PD array that got respected. And in this example, take this candle's low, boom. Take this candle's high. There's a fair value gap right here between these two candles. The candle in the middle creates the fair value gap. We stabbed up above an old swing high here, so we took out buy side liquidity. We stabbed and filled in a premium PD array, fair value gap, and then we rejected and closed below the previous bullish candle and confirmed a monthly bearish order block. So when that new monthly candle opens up, we're going to expect it to do what? Power of three, open high, respect the wick to body zone of that order block on the monthly time frame, and then trade lower to a discount PD array, that is. And remember that our dealing range was swing low to swing high. Okay, so this is the PD array matrix working right now. If you break this down to lower time frames, you probably will see a market maker sell model. The smart money reversal always happens with a PD array usually. It always takes out, it always does a turtle soup usually too. It takes out buy side liquidity, as I drew here, but I just took it off for make it look cleaner. And then the smart money reversal happens, and then we shoot lower. Let's say you missed this high, that's fine, but your mind has to tell yourself what has most recently happened. So we're telling ourselves, okay, we're in a premium. We took out buy side liquidity above these monthly highs. We stabbed up into this fair value gap and rejected hard. Therefore, there is no reason for this market to trade up back to this high. In fact, they just confirmed a monthly order block. So our risk is going to be this green candle here, okay? If you want to be a long-term swing trader, you could just go ahead and start selling right here. Put your stop above the order block and let it ride, okay? If you want to get in there on a lower time frame, I'll show you how to do that here in just a minute. So the next candle opens. It starts to trade up higher into our zone. You might be getting scared, but you have to have some risk, okay? There's no 100% certainty that it's going to work. All we have is what the market is showing us. And in this example, I remember trading this 2 years ago, and I had every ounce of confidence trading this. I remember I actually called this out to my 2022 private group to script. We all watched it unfold, and it was beautiful. What else do we have, guys? Let's go ahead and take off this fair value gap real quick. We have this last down close candle prior to the aggressive back-to-back bullish candles that takes out that buy side liquidity and stabs up into that fair value gap. So this last down close candle prior to this up move is going to be our bearish breaker blended with our bearish monthly order block. So we have two reasonings why this should actually hold price lower. So when you let it play, we obviously attacked sell side liquidity. We obviously came down into a discount. Remember, anything below this red line is a discount market. Okay? It's equilibrium of the overall trading range from this swing low to this swing high. And I put the red line on the 50% level, which is equilibrium. Look how the candles respect that equilibrium level. Isn't that kind of odd? Look at the bodies here. Look at all the touches of the wicks. Look at the body of the monthly close here. Look at the body of this month, our current month that we're in right now, May of 2022. Look at the body of it. If I let it finish, look how they closed it, just like that. That tells you this level is equilibrium. It tells you this level is relevant. It's not just made up. The next candle opens. We're still inside of that monthly order block zone blended with the monthly breaker. And then we engulf and close lower. Well, it doesn't engulf. It just closes bearish, okay? So if we break this down, remember what I said in my previous video about trading consolidations and what happens with equilibrium when they come in, when they're in a premium and they take out buy side liquidity. These are my exact words in the last video about consolidations. When we are in a premium and we take out buy side liquidity, what does the market want to do? It wants to reprice and draw back to what? Equilibrium, which is this red line. And you see that done over and over. We took out buy side liquidity, stabbed into this fair value gap, and then traded lower into what? Into equilibrium. Again, I'll draw that fib for you. I used the bodies of these candles and I drew it up to the high here. That's our dealing range. And I just slapped a vertical or a horizontal line on the 50% level. Okay, so it's not just a cherry picked level. That's how I drew it. I didn't know it was going to land right there, and I didn't know all these candles were going to line up so perfectly. That just goes to show you that I drew my dealing range the correct way. They say don't use wicks, right? And I believe that too, but I love wicks. I don't like wicks like this where they're damn, 500 pips long. But when they're like this, I will use the wick there because all these candles are ranging together, and that's the range high of all these monthly candles, okay? There is no range here. It's just two candles. That's why I chose to elect the bodies of this swing, not the wick down here. Hope that makes sense. So we have a PD array down here under 50%, which is a discount PD array. So we sold the monthly order block inside of a premium market because anything above this red line is premium. And we looked to attack sell-side liquidity below this red line. We blended that with this discount PD array, which is a buy-side imbalance, fair value gap, whatever you want to call it. So I'm going to let this play for a little bit longer. And I also want to note how the market starts respecting bearish PD arrays. Here's that breaker blended with equilibrium, the breaker body. This month opens, we trade up into the breaker and then sell off even lower. Isn't that beautiful? This breaker is also blended with this bullish candle here. They trade up, take out the previous month high, they stab up into the bullish candle and then sink lower. Where are they going? Old lows in a discounted market because they already shown us that we took out premium buy side liquidity. We stabbed up into a premium bearish PD array, sunk lower. So they're just respecting all of the bearish PD arrays and they're physically creating bearish PD arrays for us to engage in. It's a very clean market right here. Very clean example. If we break this down, let's go to the 4 hour. We can go to daily first, I guess. So here's those same levels. Okay. This zone here is the monthly bearish order block. That first one, okay? It just so happens to be a sell side imbalance right here blended with it. A no wick, we stab up into it, sink lower. Market comes back up one more time for the next month of June. We stab up above that high one more last time, and then they sink it lower. I want to draw this down to a 4 hour. The blue zone is the monthly order block, okay? You're going to see all bearish arrays get respected. So you have, as soon as that swing high gets confirmed, that's when you can draw that vertical line on your chart. I taught this a lot recently, the left side of the curve versus the right side of the curve. You're going to see old arrays on the left side, on the buy side, get matched up and blended with and mitigated on the right side. Okay, that's beautiful. So let's say you missed this entry here. Okay, let's say you missed the monthly order block sell-off, which is this blue zone. Okay, you missed it right here. Okay, guys, these two monthly highs, you missed it. Let's say you thought the market would go up higher, but you see how this month closed here. Here, let me go ahead and do this. Okay, so here we are now. So let's say you missed both of these monthly highs, maybe because you were bullish, okay? But you see how this candle closes bearish. So you're like, okay, maybe we are going lower. Maybe the dollar index is going higher. And let's say you're just now finding out that, oh, there's a monthly order block here with the monthly breaker. We took out buy side, so I'm going to switch my bias to bears now on the Aussie dollar. Okay, that's fine. That's fine. You're not late. We have a new monthly candle opens. We're going to break this down into lower time frames to find our entry for this new monthly candle, okay? But before we do that, there's one thing I forgot to do. We want to keep in mind that we have this breaker, the last down close candle prior to the back-to-back move that takes out buy-side liquidity. So let's take away our monthly order block because we already missed that, so there's no reason to have that level drawn out no more. You can visually see that level and tell yourself the monthly order block got respected, but now we identified our monthly bearish breaker, which is this candle right here. I draw the wick to body, extend it out in time. Keep in mind we have equilibrium here. So here's our new level. We have a new monthly candle open up. We're trying to get in sync with this market. We're looking for some sort of bearish setup. Okay. Before the market breaks down, it's going to play and hang out at that equilibrium level. We're going to go in here and find a setup. That way we can be involved in this month right here of September and maybe even August. So let's break this down. But keep in mind, this blue zone is our confirmed bearish breaker. We want to sell when price trades up into that breaker. Okay. So the blue zone is our breaker. We're trying to catch the monthly high of August. I'm sorry, let me fix this up. I apologize. Where'd it go? Okay, there's our blue zone. We said August, right? Where's August? Okay, it's right here, right here. So this blue zone is our monthly bearish breaker. I apologize so bad, guys. I got quiet. Stay focused. Stay focused. Let me go ahead and tell you where we're at. We missed the monthly order block sell-off. We're trying to get in sync for the month of August. We're looking for conditions where we can get in the monthly high of the August candle high. What do y'all see right here? This blue zone is our monthly bearish breaker. We see original consolidation, distribution, redistribution, accumulation, smart money reversal, the turtle soup. This is where Romeo jacked all my shit, okay? This is how he grasped a better understanding of the market, and he took my stuff and ran with it. You guys all see the Mickey Mouse the Mickey Mouse PDFs that everyone posts the threads on Twitter in the Photoshop examples that they drew up, and they'll write they'll put higher time frame array, and then they'll draw lines on a painting app and say you don't want to do anything until the market does this, and then comes up into the higher array, then you sell, and then there, and then when the market comes back to the neckline, then you can do your OTE, your silver bullet, and sell. And they'll draw it in a painting app and make it look perfect, but they don't give you it with real price action. Why can't they do it with real price action? And that's what I'm giving y'all today. Okay? Since you're taking time out of your day to learn from me, I'm going to reward you with real price action, with real examples. So your market maker sell model is going to start below your higher time frame array. I can leave this text here because this blue zone is what? This blue zone is our higher time frame array. It's the monthly breaker. This candle right here. I can't make it any more clear for you. Right here, that candle. Okay, so this blue zone, wick the body, is our array, our higher time frame array. Keep that in mind. And we're looking to be a seller. So when you're thinking in terms of a market maker sell model, you're going to see it happen on a lower time frame like the 4-hour, because our PD array zone is a monthly chart. So open, the monthly open on the 4 hours down here. Power of 3, they do a sell model up into that higher time frame PD array. That is true, but here's a real example of that actually happening. And the turtle soup is going to happen, aka smart money reversal, turtle soup happens inside of that higher time frame array. And you see that here. And then this is where Romeo and all you dumb fucks that are really subscribing and supporting that CRT bullshit come into play. Well, candle range theory. Here's this bullish candle right here. Well, the next candle opened, took out the high. Now we're going to target the low of that candle. Okay, go ahead. Take your profit right there. I'm going to hold this motherfucker all the way down to original consolidation below the lows. And it does so here. Where's your candle range theory at now? It's a little horse crap. But here's your market maker sell model up into the higher time frame monthly breaker. And then what happens on the 4-hour chart? Smart money reversal, aka turtle soup, inside of the higher time frame, and they engulf and close below this candle. So here it is again. We have a nice, thick, solid down close candle prior to the back to back to back up move. There's not one single red candle in this price run that takes out the high here. That's what makes it a high probability breaker. And that is a notepad moment. And I've never told anyone that one yet. There's not one single red candle. Look how fast and violent they take out buy-side liquidity. And then they engulf and drop lower. So even if you miss the high here at the breaker, which I remember trading this, I'll never forget this month of trading. It was one of my best. But even if you missed this high, the smart money reversal high, you're still okay. Yes, they came down and they took out original consolidation here. They took out everything on the left side of the curve, but we still have a sell side unbalance that needs to be filled. And now we have a new lower time frame breaker. It's this down close candle prior to the swing that took out stops. So it's the monthly high. But now we're going to take and draw a line on the close of that breaker. So now we're using this candle as our breaker. What happens? You can draw your fib now, and here's your new dealing range. Swing high, down to swing low. We got to come back up to a premium before the market can go even lower. And what happens, guys? I'm about to blow y'all's minds with this one. We come up into a premium. Is there a ray in the premium? Yes, there's a PD ray in the premium market. There is a bearish breaker array. There's also a sell side imbalance that needs to be filled. It's also an OTE into a premium. Where's the swing high? Where's the high of the market? Right here at the breaker. You don't wait for the order block. The last up close candle prior to the down move. No, they're going to respect the breaker. That's the way the algorithm books price. Then what happens? Then we sink lower. If you break this down on a lower time frame, you will see another market maker sell model. And remember what I just said. Listen, hear me out, guys. When you have a higher time frame monthly chart, you're going to see the market maker sell models on the lower time frames. And they're going to see it form and gradually come up into that blue zone, which is the monthly breaker. And then for this example, you see the higher time or the lower time frame on the 4 hour. You can break this down to a 1 hour and you're still going to see the market maker sell model happen. Okay. But now our selling zone, which is this breaker, is a 4 hour premium. Our higher time frame is 4 hour now for this next sell. This breaker sell, it's a 4 hour. Therefore, if you break this down to a 1 hour chart, you're going to see another sell model, but it's going to be more clear on the hourly chart or the 15-minute chart. Your original consolidation is here. You have distribution here. You have redistribution or reaccumulation here, and then redistribution here again one more time. Smart money reversal happens at higher time frame PD array, which is just the 4 hour chart this time. 4 hour breaker, 4 hour sell side imbalance. It's a premium, and the overall dealing range now is this swing high down to the swing low here. So your smart money reversal happens here. What happens before they go lower? They turtle soup this bullish candle. The next candle opens, we stab up above the bullish candle. We're trading up into this breaker right here. And then they go lower. So here's another market maker sell model. What's the market going to want to do? Attack original consolidation over here on the left side of the curve. So once this swing high gets confirmed, you can drop down to a lower time frame, draw your vertical line here, and blend everything with the left side of the curve versus the right side of the curve on your intraday chart on a 15-minute time frame. And you're going to find lower time frame entries lots easier. I can break that down for y'all and show y'all, but I want y'all to do something on your own. This stuff doesn't come easy. You have to get in there and visually do it yourself. This is your new zone to look to be a seller. And you could actually go right here and put 4 hour array. This blue zone is our 4 hour array. Just like this blue zone at the very top, this thick one is our monthly array. So we're no longer worried about the monthly array, but you still want to keep in mind that there's no reason for price to come back up into this higher blue shaded area. Okay. So now we have a new shaded area while we're thinking the market's going to make a high in. So you would drop this down to a 1 hour time frame and go and look for all those same signatures. And the reason why I kind of didn't want to do this and break it down to lower time frames again is simply because I got to scroll back so far. Okay, here we go. Maybe, is this it? Yep. So here it is again. Now here is your market maker sell model on the 1 hour time frame coming up into our 4 hour premium breaker. What else do you see that can confirm a high? Look left. Let's go ahead and just take everything off the charts. What does a 4-hour breaker blend with? What do you see? Oh, hourly sell side imbalance. This one down close candle creates this sell side imbalance. So we're expecting the market to stab up in there. They take out previous day high. They turtle soup it. So this is a 1-hour turtle soup into a 4-hour breaker. It's a 1-hour turtle soup. And they stab up into a 1-hour sell side imbalance. They turtle soup, aka smart money reversal. My bad. I see what my dog was. I get distracted so easily. Shelby, enough. They turtle soup the 1-hour. I got company. All right, guys, pause.